Hi, my name is Aaron Udi, Chief Operating Officer of Asbury Investor Relations. We're excited to host WisdomTree at the Shareholder Equity Conference. Through their subsidiaries in the US and Europe, WisdomTree is a leading publicly traded, exchange-traded fund and exchange-traded product sponsor and asset manager. I have the pleasure of speaking with Jarrett Lilien, WisdomTree President and Chief Operating Officer. Jarrett has been part of the WisdomTree management team since 2017 and was on the board of directors from 2008 to 2017. Mr. Lilien has extensive experience in the financial services industry, including managing partner at Bendigo Partners, a venture capital investing and advisory firm, as well as several years as president and COO of E TRADE. Thanks so much, Jarrett. It's great to be here with you.
Yep, good to see you, Aaron.
Well, maybe we can just start off at kind of a general overview. If you could tell us a little bit about WisdomTree and what you do.
Sure. In a nutshell, and you covered some of it, WisdomTree is the only publicly traded exchange-traded fund specialist. Our mission is pretty simple. It's to provide best structured access to various asset classes in exchange traded wrappers. Globally, we've got over 320 products. It's a mix of equity, fixed income, commodities, currency, some mega trends, but also crypto. And today we've got over 80 billion in assets under management, which is actually an all-time high for us, which I think is actually remarkable given the difficult markets that we've been dealing with of late.
Yeah, that makes sense. And how has the company evolved, and in your opinion, what makes it a compelling investment today?
Well, the company has definitely evolved. And I think what makes WisdomTree a compelling investment today is that evolution, but it's also that I think a lot of the evolution has been overlooked, which actually includes a really distinct inflection point back in 2019. Talking a little bit about the evolution, though, we launched our first ETFs back in 2006. And then a big part of our history and understanding our story is what took place back in 2013. Two of our funds were really in the right place at the right time. Back then, people were interested in Japan, they were interested in Europe, but they also felt that the dollar was going to be strong. So we had a fund, Japan hedging out the yen, Europe hedging out the European currencies. That was the perfect product, if that was your view, and everybody loved it. And so those two products over about an 18-month period grew from zero to about 40 billion in AUM. And as I always say to people, that was like the greatest party of all time. And then, with great parties, usually are followed by a pretty great hangover. And for us, there was then a 4 or 5 year period where those funds and that idea of liking Japan, liking Europe, liking the dollar, that trade was on, but then it was off. And so those funds fell out of favor, and AUM in those two funds went from 40 billion to roughly 4 billion where they are today. So we had a 5 year period where it was really hard to outrun $36 billion of outflows. But during that time, and this is the story that I think a lot of investors miss, a lot of work was being done to make the infrastructure stronger, to diversify the product suite. We also made an acquisition in Europe back in 2017 and did a lot of integration and restructuring work. And I really think all of that hard work started to show up, and there was this inflection point back in September of 2019 that I think, is still gone largely unrecognized. But let me tell you where we are today. Our product positioning is outstanding. Over 2/3 of our AUM is currently leveraged to the themes of today: rising interest rates, inflation hedging, rotation from growth to value. Our performance is outstanding. Nearly 80% of our US AUM is in the top 2 quartiles of performance relative to Morningstar benchmarks. Our flows are broad and deep. 3 times as many of our funds are inflowing and outflowing. We've got great momentum in the business, 6 straight quarters of positive flows through this past March. And we have more AUM today than we did on January 1st. And I'm not sure how many other asset managers can actually say that. So I think, just what I've summed up there alone, I think makes WisdomTree a compelling story. And that doesn't even touch on our digital assets opportunity, which I know we'll touch on in a little bit.
Yeah, that was a great background. Thank you. And to hear the evolution, of the company to get you to kind of where you are today. If you think about, it's also become a more competitive, environment. And if you think about that, how would you describe your positioning, relative to your competitors in this current environment and where you're at today?
The first thing I'd say relative to our competitors is that we're smaller. I mean, we're all proud of $80 billion of AUM, but we play with some giants. But I view being smaller as one of our advantages. Personally, I like being a challenger. But as a challenger, we strive to always be at the forefront of innovation and change. We're nimbler, we're better able to attack new opportunities. But also when we're successful at capturing new opportunities, they have meaningful impact on our revenues and earnings power. So I think that's one of the things that really sets us apart. It's one, our size, our ability to act, our innovative spirit, and then the impact this can have on our performance.
And so, with those kind of emerging things that you're looking at in the strategy, you're saying it can make, if you guys have the ability to make a big difference by making, relatively smaller changes relative to some of your competitors. Maybe if you could talk a little bit about your long-term vision and strategy and where that's headed.
Yeah, I probably drive everybody crazy inside of WisdomTree because I'm always harping on 3 things. Invest in growth, both today's growth and tomorrow's growth, invest in efficiency, and invest in team. What you're really asking about is really the growth. And our goal is to drive healthy organic growth in our assets, our revenues, our earnings. And I'm really excited about our growth prospects, both today's and tomorrow's. I'll give you 3 reasons for that. One, I've already mentioned, our product positioning's never been better. AUM's levered to the right themes that are flowing, our products are performing. But a second one is we've got a relatively new initiative, and it's a good example of one type of innovation within the firm. And this is around managed models. And this is an initiative, again, that we've been working on. We're early in our 3rd year, but just now its impact to not only our flows, but the quality of our flows is growing. And then, I keep touching on digital assets, but digital assets are a natural extension of our core business with just a massive market opportunity. So maybe I leave it there and let you direct me where you want me to dig in more.
Okay, so let's definitely come back to digital assets in a few minutes. But one of the things you've mentioned, previously that's kind of headline news, frankly, right now, is some of the macro trends we're seeing. Inflation's at a 40-year high, rising interest rate environment, and this rotation to value that we haven't seen in quite some time. How are your capabilities positioned to address these kind of headline trends right now?
Yeah, I mean, the headlines are great. I mean, as I've mentioned, 2/3 of our AUM is levered to the themes that you just mentioned. But another interesting distinction with WisdomTree and most of our equity funds is how we weight our indexes. And I might be getting a little bit into the weeds here, but a traditional index, they're generally market cap weighted. And almost by definition, when you weight your index that way, it makes you a growth fund. We at WisdomTree have done our indexing differently. We weight our indexes on fundamentals, such as dividends and earnings. And really, if you think about it, by definition, that makes us a value or a quality shop. So, we've been in this hyper growth market for 16 years when basically our indexing methodology really makes us a value shop. So we've done well, but as you mentioned, we're now experiencing a strong rotation to value. It's a distinct advantage for WisdomTree.
Yeah, and I suspect, I don't know how much part that's played in the success that you've had, where you're now kind of running into 6 straight quarters of positive net inflows. But I suspect it has. And then, can you talk about really how do you keep that, positive momentum going? And what do you think will be the key drivers for kind of positive flows going forward?
Yeah, a 6-quarter streak is great. The thing that is tough about it is there are no shortcuts. I mean, a 6-quarter streak takes 18 months to achieve. So no shortcuts, and it also doesn't happen by chance. There's a lot of positioning and a lot of work that sets up for that. And then even when you have it, you can't celebrate for too long because you got to keep it going. So really, to your question, how do we keep it going? I'm really confident. I've touched on a lot of the things. We're really well positioned. So if I look at why am I confident for continued growth, some is product positioning and performance. Some's also new products. Last year, we launched 30 new products. This year, we'll launch another 30 new products. New products help a little bit with current growth, but you're really sort of priming the pump for future growth. So how do you keep it going? So we've got new products that are getting seasoned now that'll help with tomorrow and the day after. And then also that managed models franchise that I mentioned. Let me tell you more about that. Essentially what that is we build custom model portfolios for advisors. It helps them run their businesses better, but it also helps them help their end investors achieve their investment goals. So these are, it's a big trend in wealth management now, are, central models, but they need to be customized, which is something that we're doing. So today we partner with advisors in the RIA channel and the independent broker dealer channel, as well as advisors at large firms like Merrill Lynch or Morgan Stanley. As I mentioned, we're only in our 3rd year, the beginning of the 3rd year of this program. Last year, we disclosed that already 10% of our flows are coming from this initiative, and the momentum there is only increasing. So, all of these things taken together are helping today's growth, but are also going to contribute to keeping it going.
Yeah, thank you. You talk about managed models as a big trend. I think, ESG is clearly, another one. And I saw that you recently named 2 heads of ESG strategies. Can you talk about your capabilities there and how that might evolve?
Yeah, and you're right, ESG is a growth area. Everything you read in the news these days shows you why I think it's also of growing importance to not only just people and how they live their lives, but also investors. It's also important to us. And our approach has been very holistic. We first want to make sure that, we're walking the walk and talking the talk. So we have to apply good ESG principles in-house to how we manage our business, how we think about new products, research, our services for clients. So now with heads, 2 co-heads of ESG in place, they're helping us be better operators, better stewards of our clients' assets, but they're also helping us win greater mind share across the industry. So this is a growth area. I'd say watch this space. You'll see more from us in this regard over the coming quarters.
So you've covered some of this already. So feel free to make this relatively short response if you want to. But in terms of the greatest areas, if you had to boil it down, of opportunities and challenges for you guys, what do you see as those?
Yeah, well, I guess that, and sorry, I don't know if you heard that, but I got the dog barking in the background there. But
yeah, that's the advantage of working from home.
I know, it's we've all gotten accustomed to. There are two opportunities in particular that I see as very exciting right now. One is the managed models business I already spoke about. And not only is that 10% of flows today that I expect to see that percentage growing, but it's the quality of those flows, which is another, maybe a little bit in the weeds, but the flows from models tend to be recurring in nature. And so I view them as being stackable on top of our current flows, and they also tend to be stickier. So that one is exciting. But the other one, and we'll keep talking more about it, but is digital assets. And, it can become complicated when you say digital assets. A lot of people's eyes glaze over. And so, we've simplified our vision to it being sort of twofold. We want to bring crypto to the mainstream, and then we want to bring mainstream assets onto the blockchain and into the digital world. And the addressable market on both of those opportunities is massive.
So could you go into a little bit more detail about what that, I know it's complicated, but in words, that could kind of basically describe it for us. When you say bringing crypto to the mainstream and bringing mainstream assets to the digital world, what do you mean by that? And then what do you think you need to do to be successful there?
Yeah, and at the risk of going too far into the weeds, let me address both a little bit. First, in bringing crypto mainstream, we've already done a lot, and we've been at this for several years at this point. We already have 8 crypto exchange traded products in Europe. 5 of those are single coin. 3 of them are baskets. We have nice growth there already as well. Just this year, 40% organic growth year to date. So 8 funds in place with growth. In the US, we filed for a Bitcoin ETF. And while we're waiting for that to be approved, we've also launched the first separately managed account solution for advisors. So if they can't buy the ETF, let's help them bring crypto directly to their clients. And that addressable market, you try to, again, simplify some of the concepts, but, there are $30 trillion in US wealth, in, AUM. So if you think about a 1% allocation, that's a giant number, and we actually think the opportunity is bigger. So that's just bringing crypto mainstream. But then there's the flip side, which I actually think is even bigger, and that's bringing mainstream financial assets onto the blockchain and into the digital world. And I think it's actually good to take a step back and hear what our strategic rationale was. 4 years ago, 5 years ago, we asked ourselves, what could do to ETFs what ETFs have done to mutual funds? And, if people haven't been paying attention, mutual funds were the wrapper. And then ETFs came along, it was a better wrapper. It was very disruptive, and ETFs have been taking market share from mutual funds for like the last 15 plus years. So our question was, what could do to ETFs what ETFs have done to mutual funds? And when you look back on it, in the 1960s, Vanguard, they grabbed the leadership position in low-fee passive mutual funds and established themselves as the giant they are today. Along came ETFs, a better fund structure. Vanguard didn't immediately adapt. Instead, iShares came in and they became, the giant in ETFs, setting up BlackRock to be what they are today. And so today we see blockchain traded funds as the next disrupted fund structure. That answers the question, what could do to ETFs, what ETFs have done to mutual funds? We think it is blockchain traded funds. We think that's the next disrupted fund structure, and we're leading it. We expect to have two traditional assets on the blockchain and in the digital world this year. That would be digital gold and digital US Treasuries, with more digital exposures to follow. But if you want to think about opportunity, think of Vanguard and mutual funds, BlackRock, iShares, and ETFs, and think of WisdomTree and digital assets. And that gives you the scope of just how big this opportunity is.
That's a really interesting analogy. What could disrupt this world, the same as kind of has how it's been done in the past within the asset management industry. I did want to talk about something that you spent a lot of time with on the earnings call, your most recent earnings call, which is the pending launch of WisdomTree Prime. This is a strategic shift for WisdomTree. If you could give us some details on your plans here, talk about maybe your target market and how it's differentiated from other financial services or fintech offerings.
Yeah, and it's a great question. And the challenge is when we're communicating, because these are new things, is to not go too far into the weeds, which sometimes we do. And when we do, sometimes people will say, hey, that's a strategic shift. So one of the things I'd say is it's not a strategic shift for us. Really, it's a natural extension of our core business. It's consistent with our heritage of being a challenger and an innovator. It's consistent with that mission that I mentioned right up front, to bring our clients the best structured access to various asset classes. So that's what we see that we're doing here. There's a lot of jargon out there: blockchain, crypto, neobanks, digital wallets. It can be confusing. We're now making an effort to, try to de-jargonize some of this. So when I think of WisdomTree Prime, you can think of it simply as a mobile app that is providing clients access to digital assets with a premium user experience, allowing for investing, savings, and spending. So, it's pretty simple. We're looking for a beta launch this quarter, so we're very excited about that. We hope to roll out nationally by the end of the year. Then we'll look at global opportunities from there. WisdomTree Prime is going to continuously evolve. And, if I didn't learn anything else at E-Trade, when you have new products, if you wait until they're finally finished, they're never finished and you'll never launch. So you have to launch and then continuously evolve. So, we will have that beta. We will then have that national rollout, and then we'll be looking to add at least one new feature every month. So, stay tuned. We're very close on that one, but very exciting.
It's fascinating. And we did get some questions from the audience, if you don't mind me asking. And not surprisingly, I think, there's a lot of focus on the digital side. And so maybe if you don't mind, I could get a couple of questions from there.
Sure.
So the first one is it easier to launch you talked about your ETFs in Europe. Is it easier to launch new products in Europe? And I think they probably specifically mean crypto products. And compare that, to the US?
Well, clearly so far it's been easier, but I wouldn't really think of it as easier or harder. It's just different. And so there has been, there's been an earlier reception in Europe, and that's why we've got 8 products there already in the market. But, it's important, and actually, it brings up another point. There are a lot of people in the marketplace, and a lot of people are doing things without any regard for regulation. One of the advantages we think we have is that we're a highly regulated firm. We understand regulation. We understand working with and the importance of working with regulators. So, we will be bringing forth the regulated advancement of this asset class. But we don't really think there's anyone better positioned to do it than we are.
Well, and that kind of leads to another question that came in, which is, why do you think other asset managers aren't attempting to do some of the things you guys are doing in the digital space?
You read the news in the last few weeks, and you'll see a lot of others are now. You're seeing a lot of announcements of people hiring heads of digital assets, and most of the other asset managers now are looking at it. But just go back to some of the examples we hit on, like when ETFs came along. Why are there still mutual fund companies that don't have ETFs? I mean, so inertia, sort of being complacent is easy to do when you're big and the old business is doing well for you. It's easy to be a little complacent about the new business. So, that's not our culture. Our culture is to be on the leading edge of innovation. And right now we do see others coming in, which kind of makes us feel good that it kind of confirms our interest. But it also means we've got to press our advantage. We've got about a 3 or 4 year head start, and we plan to press that advantage.
Yeah, it does come through, certainly the innovation component, that is part of your story and been so really since the beginning. So, but Jarrett, I just want to thank you. It's been a pleasure, and it was great to hear your update. I look forward to continuing to follow your progress, and in particular, I believe you've got significant opportunities in the digital world. So thank you, I appreciate it. And up next is AirSale.